Hello friends, in the current video we will work out the problem of sole trader final accounts, right? So we'll take up university question, that is 2017 paper. Question we will take first one. First we need to go through the entire question. So the information we have provided is, this question says that prepare final accounts from the following trial balance for the year ended 31st March 2009. So we are asked to prepare final accounts from the trial balance given. Then the trial balance says that the information we have provided is purchases 4,50,000, machinery, returns, then sundry data, stock, cash at bank, stock, rates and taxes, wages, salaries, freight, furniture, and it is 9,75,540 is the total. Then whereas sales, capital, returns, sundry creditors, provision for bad and doubtful debts. So this is the trial balance, whereas the adjustments are closing stock. Closing stock is a general adjustment, always it will be there in the question. Outstanding salaries. Whenever we get an adjustment with relevant to the particular item, that item should be ticked. Like here, outstanding salaries. So we need to tick the item salaries. So it means that there is an adjustment on this item. So we have slightly kept a dot at salaries. So basically you have an idea that what is adjustment. Adjustment is an item on which double entry is not completed and it was ascertained. Adjustment item was ascertained after the closing of the ledgers and preparation of trial balance. Hence, we cannot go back and incorporate the double entry process. Hence, what we will do while preparing the financial statement, we incorporate the adjustment items, right? So the ultimate objective of preparation of accounts is to prepare. The ultimate objective of preparation of financial accounts is to prepare financial statement, right? Write off 4,500 as bad debts. So we have to tick on debtors. Whenever there is an adjustment of bad debts, it should be on sundry debtors. Sundry debtors. Then, right? Next, create provision for bad debts is one. So there are two adjustment on one item, that is debtors. On debtors there are two adjustment, that is create provision for bad debts 4% on sundry debtors, and there is an existing provision is there in the question, that is 7,500. I will explain how to do. Provide 6% depreciation on machinery. So we need to take machinery even, right? Provide interest on capital at 3%. So capital we need to tick, right? These are the general adjustments we have given in the question, and we need to start the question. See, as you are already aware, in my earlier videos, even in partnership, in dissolution, even I was very much concentrating and putting my emphasis on procedure and the procedure of working out of the problem. The procedure should not be violated. So here also we must follow the procedure. Clear? So whenever you are asked to prepare final accounts, you require to prepare trading, P&L and balance sheet. And most important is all the three should be prepared simultaneously, not one after another. So one after another preparation is an immature way. Hence, we need to prepare simultaneously, right? So as we have already prepared the format here to minimize the time, and the same you need to write. First one is trading account. Here the firm name is not mentioned. Trading account of dash for the year ended 31/3/9 it is given. So particulars rupees particulars rupees. Then here profit and loss account of firm name is not mentioned. I'm keeping dots here. For the year ended 31/3/09, same particulars rupees, particulars rupees, right? I am extending the account here also. If the place is not sufficient, you can extend the P&L account, right? Then this is the balance sheet of dash 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 as at 31/3/09. See, the balance sheet earlier we used to write as on, that has been replaced with as it, right? So we write liabilities amount, assets amount, right? As you are already aware, and I have informed that trading and P&L is an account, DRCR, whereas balance sheet is a statement. There is a basic difference between trading and P&L and balance sheet, right? Once we have drawn the entire format, so we will start with the question, right? As I have told you, we will prepare simultaneously all the three, right? Now, first item, purchases, right? Purchases is a trading account item. So hence it is recorded in trading account. So first we need to write to opening stock, right? It will be always there, opening stock. If it is not there, even just put it opening stock and leave it blank. Whenever that item comes, we will incorporate. And next to purchases. So what is the amount of purchases we have? 4,50,000. So we write 4,50,000 in the inner column. And there itself we write returns. Then itself, and leave the appropriate place, and we'll draw the line. Whenever returns comes, we will write. If it is no returns, we'll put the dash and write down the amount outer column, 4,50,000, right? Then after purchases, we have machinery, and we have ticked the machinery as there is a adjustment on machinery. So machinery, first of all, it is an asset. So it should be recorded on the asset side of the balance sheet. First, asset side, machinery. What is the value of machinery? 1,15,500. Inner column I have written as there is an adjustment. And what is the adjustment says? Adjustment says that provide 6% depreciation on machinery. Whenever any adjustment item is we are writing, we need to write inner column, then treatment of adjustment minus depreciation. How much? The rate of 6%. So 1,15,500 into 6%. We'll get 6,930. Then deduct this 6,930. So 1,15,500 minus 6,930. You will get 1,08,570. And what to do with this 6,930? So it is an adjustment item. On this, no double entry is completed. So now we need to complete the double entry. How to complete the double entry? One impact of depreciation is to be deducted from the machinery, and the second impact, it should be shown on the debit side of the P&L account. So leave one entry place and then you write down, because if it is gross loss, we need to write here. So we need to leave the one entry place, then write down depreciation on machinery. So that is 6,930. Only the depreciation value we need to write. Clear? So this is the way we are completing the double entry completed, deduction from asset and shown as a expenditure, right? Here it is credited, here it is debited. Credited in the sense deduction from asset is crediting, not writing on the asset side, right? Please understand the concept. Then next item is returns. So returns is given on the debit side of the trial balance. It does means that which return it is sales return, not purchase return, right? So if it is given on the debit side of trial balance, it is a sales return. So first we write on the credit side by sales. So leave the place blank, then returns. Returns is given, that is how much is the returns? 18,000. So 18,000 I am writing here and leaving the place blank and for sales and drawing line. Whenever sales comes, we will put the amount there, right? So once the returns is done, then sundry debtors. Sundry debtors, there are two adjustments on sundry debtors. Hence, we write on the asset side of the balance sheet first. Sundry debtors. What is the value of sundry debtors? 1,42,000. And what the adjustment says? Two adjustments, right? The adjustment one is write off 4,500 as bad debt and create a provision. Always bear in mind the maximum we can find three adjustments on debtors. One is write off bad debts, then create provision for doubtful debts, and the third one is create provision for discount on debtors. And always bear in mind we must follow the procedure. First we need to deduct bad debt minus bad debt. What is the value of bad debts? Bad debts is 4,500. First we need to deduct 4,500. So 1,42,000 minus 4,500. So we'll get 1,37,500. I am writing in the inner column itself as there is one more adjustment. So then after deducting bad debt, this bad debt should be written in the P&L debit side. Two bad debts. 4,500. The double entry is completed regarding bad debt. After deducting the bad debts, whatever the resultant value we get, on this we need to calculate provision minus PDD. PDD stands for provision for doubtful debts. As per the question, it is at the rate of 4% we asked to calculate. On which value, always bear in mind we should not calculate on opening value, that is 1,42,000. We must calculate on the after deducting bad debts, whichever given in adjustments. We are not talking about the bad debts given in trial balance. If it is given in the trial balance bad debt, directly recorded in the debit side of the P&L. It is an adjustment. So once we deduct the data bad debts, whatever resultant value we get, on this we need to calculate provision. How much? At the rate of 4% into 4%. That is equals to 5,500. So 5,500 and resultant figure I will write here, 5,500 minus 1,37,500. So 1,32,000 is the debtors. But new provision, how much we have calculated? 5,500. And we must see already there is an existing provision given in the question. The existing provision is 7,500. So what is happening here? We have calculated our new provision is required provision is 5,500, whereas already we have created 7,500. So existing provision is more. Hence, what is the accounting treatment? Whenever if the existing provision is more, then it should be withdrawn. So by PDD, old PDD is 7,500 minus new PDD is 5,500. So resultant figure should be written 2,000 outer column. On the credit side of the profit and loss account, presume that if the old provision is less, suppose old provision is 4,000 only, then it should have been written on the debit side. So new provision minus old 1500, still the provision is required, hence it should have been written on the debit side. But here in this case the existing provision is already more, hence we have withdrawn 2000 rupees, whatever excess provisions we have. Clear? So this way we need to do this item. Next, debtors is done. Then cash at bank. Cash at bank is straight away asset. So we write cash at bank on the asset side, 34,655. Am I right? Yeah, 34. Opening stock is given. Already we have written the opening stock here. The same place we will write down the amount, that is 64,504. 64,504, the opening stock, right? Rates and taxes. Rates and taxes always is a P&L account item. So to rates and taxes. So rates and taxes P&L account item, therefore P&L account debit side 9,800. Then wages. Wages is always trading account item. To wages. Wages is a direct expenditure. Rates and taxes is an indirect expenditure. So you are aware, already I explained in my earlier videos, that is direct and indirect expenditure. Direct should be written in trading account, indirect should be written in P&L account. So the amount of wages is 55,000. Right. After wages, salaries. Salaries is a P&L item. To salaries. And there is an adjustment on salaries, that is 67,000. And the adjustment says that outstanding salary is 18,000. Still it is payable. So what is the accounting treatment? It should be added. Add outstanding. How much? 18,000. So 67,000 plus 18,000. So that is 85,000 is the total salaries we need to pay in the current financial year. As per the accrual concept, though it is paid or not paid, it should be recorded. As per periodicity concept even. Hence, it should be added outstanding salary, right? And this outstanding salary will become our liability. So we write here, leaving the place for capital and all. So outstanding salary, that is how much? Only 18,000 will be written as a liability. Still it is payable. Right. Then freight. Freight is a direct expenditure. To freight. Freight value is 6,555. Right. Then furniture. Furniture is an asset directly recorded on the asset side of the balance sheet. Furniture. What is the value of furniture? 12,500. Now come to the liability. Sales. So sales we have already recorded here. So written here sales. So there itself we will directly write the value of sales. 7,21,005. 721,005 sales. Right. Then sales is done. Then capital. Capital is a liability recorded on the liability side of the balance sheet. Capital. In the inner column we write capital 1,25,000 because we need to make some adjustments here, in the sense additions and deductions. So 1,25,000 always inner column you write down. Returns. Returns is given on the credit side of the trial balance. 24,009. Whenever it is given on the credit side, it is purchase return. So bear in mind, purchases shows debit balance, it's written credit. Sales shows credit balance, it's written debit. So purchase return is 24,009. 24,009. Already we have left the place. Sundry creditors. Sundry creditors is a liability. We have to write directly sundry creditors. Sundry in the sense small, all creditors. Collectively we have written. Right, how much is the value of sundry creditors here? sundry creditors is 98,000. So sundry creditors is 98,000. Directly we have written in the outer column sundry creditors. Provision for bad and doubtful debt. Already we dealt with this item, right? We have already accounted for. In the sense, while writing the provision for doubtful debts, we compare the old and new we have written. So already this item is over. Once the trial balance is over, now come to the adjustment. Closing stock is the first adjustment. What is the treatment of closing stock? Always it will be written two places. By closing stock on the trading account credit side, 98,000, as well as it should be written on the asset side of the balance sheet, that is closing stock, 98,000, right? So once it is done, next, outstanding salaries you are already done with. Write off 4,000 bad debts is done with. Create provision for bad and doubtful debts is already done, right? Provide 6% depreciation is done. Interest on capital. So did we not take capital? Yes, still we take the capital we did not consider while writing. Please bear in mind, this is very, very important. We should not miss like this. So interest on capital. Now we do the treatment, 3%. So interest on capital will be added. Interest will be added. How much? At 3%. So how much is the capital? Total capital is 1,25,000 into 3%. That is 3750 is an add item. So we will leave it. And then this interest on capital is an expense for the business because proprietor will be asking for interest. Therefore, to interest on capital, that is 3750 is an expense, is a expenditure for the business. So it will be written on the P&L account debit side. So with the help of this, we have done all the items. Now closing. First close the which account? Trading account, right? So we must close the trading account first and find out the balance. What to do? What is the procedure of closing? First we need to find out whichever side is more. Both the side we need to write the same value, right? But prior to that, we did not do this treatment of purchases and sales. So write down, do it here. So what is the value of purchases? 4,50,000. Is it visible? I hope it is visible for you people, right? 4,50,000 minus returns, that is 24,009. We'll get net purchases 4,25,991. Right? Then in the same way we need to do sales even. Sales is 7,21,005 minus 18,000. So 703,005. So net sales. So it is net purchases, net sales. How will get net purchase and net sales? After deducting return from the concern item. Clear? Then once this is done, we need to make the summation. Summation of both the sides we need to make, and whichever side is more, that should be recorded. So credit side summation is 7,03,005 plus 98,000. So we are getting somewhere around 8,01,500. So just this place we did not use, we are using for rough work. So we are getting how much? 8,01,801,005. This is a credit total. In the same way, do the debit total even. How much we will get? So debit total is 64,504 plus 425,991 plus 55,000 plus 6,555. So we are getting how much? 5,52,050. So credit total is greater. Both the sides will write credit total. That is 801,005. 801,005. Just simply you make the total of credit. This is credit total, this is debit total. Both the side, whichever side is more, you write down. From this figure, whatever debit total you made, that you need to deduct. So already this value is there on the my calculator, so I'll deduct 801,005. So I'll get 2,48,955. So how much I am getting? 2,48,995 is our gross profit. So to gross profit, this is carried down, gross profit carried down, and this gross profit will be brought down to P&L account. So by gross profit brought down, how much? 2,48,955, right? 2,48,955. Same gross profit carried down here will be brought down here. If it is gross loss, it will be here as well as here. Credit side of trading account and debit side of P&L account. Once you get the gross profit, then same way, whichever side is more, you make the summation, right? And ascertain whichever side is more, right? So we'll do the calculation of credit side. That is then 2,000. So credit side total we are getting 2,50,955. Sorry, this is credit total of P&L account. 2,50,955. 2,50,955 minus, will make the debit total 6,930 plus 4,500 plus 9,800 plus 85,000 plus 3,750. So we are getting credit total is only 1,09,980. So which side? Credit side total is greater value, that is 2,50,985. Sorry, 955 it is. Extremely sorry. 955. 2,50,955. Clear? So from this we will deduct the highest value. Already it is there, 2,50,955. 2,50,955. Therefore we are getting gross profit, sorry, net profit. Which side? 1,40,975 to net profit carried down, C by D. This net profit, if it is credit side balance figure, it is net loss, right? So we are getting this side. So this, if you make this summation again, it will be this one. So this is called as balancing figure. How did we got these values? Gross profit and net profit while balancing the ledger account. See, this is called as balancing figures. So once you got net profit, the net profit should be added to capital. So here we will add net profit. How much? 1,40,975. Then make the summation and write down in the outer column. So total is 1,25,000 plus 3,750 plus 1,40,975. 1,40,975. So I am getting the summation here, 2,69,725. Clear? Now once this is done, our balance sheet should tally. So our balance sheet should tally, otherwise we are wrong. Clear? So now we will check whether it is getting tally or not. Right? So make the summation on the credit side, 2,69,725 plus 18,000 plus 98,000. Right? So 98,000, that is we are getting in the assets liability side of the balance sheet is how much? 3,85,725. 3,85,725. Now do the summation of the asset side. So 1,08,570, then 1,32,000 minus 34,655 minus 12,500. So fortunately, or by the grace of Almighty, we could able to tally the balance sheet. That is 3,85,725. This is the most important area, tallying the balance sheet, right? So we will be always concerned about whether the balance sheet will tally or not. So this is the general and very precise way of doing the problem. Bear in mind, the most important thing I would like to tell you here, that we should not violate the procedure. Procedure, whatever I have explained you must follow the procedure without any dilution. If you follow the procedure, you will minimize the what we call mistakes. Our chances of making the mistakes will be minimized, right? So if you do simultaneously all the three, it is easy for you to work out the problem, right? Please to try to understand the concept. If you have any doubt, do ask me through what we call comment. I would be glad to give the answer. At the same time, do subscribe my channel and motivate me to create more qualitative subject related videos, and give your likes. If it is dislike, even you can give, I don't mind, right? But I will take it positively to enhance the quality, right? So subscribe my channel. Thank you very much.